FNB's property barometer, which tracks movements in the country's property market, is suggesting banks are starting to lend more. But are we seeing a corresponding increase in property prices? Well, Sipamandla Mkhwanazi is the FNB economist involved in that barometer. He joins us now. Sipamandla, thanks indeed for coming through. I mean, the one thing that property prices generally suggest to us is when it does well, it's some sort of an indicator that perhaps sentiment generally in the economy is starting to improve, albeit slightly. If you look at September's barometer, is that suggesting anything to that effect?
Yes. Look, we are starting to see property prices ticking up, particularly in the second half of the year, after that despondency in the first half of the year, when people are worried about the uncertainty in the political space and the elections that are coming up around May. And subsequent to that, we have started seeing a mild improvement in demand. I wouldn't call it new demand. I would call it people who were already in the pipeline. So they were just waiting for those good news or some sense of direction before they jump into the market. So we are seeing some of those people coming into the market now.
So this particular barometer, which I found quite interesting, is that there is a suggestion that banks are giving out bigger loans, if not more loans. You clarify that for me. Yet we're not really seeing a corresponding increase in the actual price of property. Why is that?
Look, yes, we are seeing an uptick in mortgage advances. For August, it averaged 4.9% year on year, which is the highest since November 2010. So that suggests that banks are opening up taps, only slightly though. So that has translated into a slight uptick in volumes, just slightly, about 0.9 compared to where we were this time last year. But secondly, and most importantly, is that for every transaction, banks are now willing to finance a bigger proportion of the purchase price. In the second quarter, we averaged 90.6% versus 88% exactly 2 years ago. Now, that suggests that banks are willing to finance a bigger proportion of the purchase price, again suggesting that they are starting to open up taps a bit. However, we haven't seen that translating much into price because there is still excess stock in the market. So we need to clear out that stock first before that translates into stronger house price growth. At the moment, we are seeing a surge in the supply of new stock, particularly flats and townhouses, and there's also a supply of stock from people who are emigrating or leaving the country, so immigration related sales, but we are not seeing enough inbound demand, so from foreigners who are coming into the country. So that leaves that excess stock for the domestic market to absorb, but we haven't seen much of that at the moment. So we are still in an excess supply kind of an environment, although we have since that a slight tick up in demand.
Well, at the end of the day, it's a supply story. Property is still a difficult market at this point in time. What happens if we eventually do get an interest rate cut that many people are vying for in this year? Could we see the dynamics of the property market change at least slightly?
At least slightly, yes. We do think that in the short to medium term, that is going to be a determining factor because cumulatively we would have had a 50 basis point cut. And in the past, that would have been sufficient to at least entice people to start coming into the market. So the combination of those two cuts, if we do get one by the end of this year or early next year, we do expect to see a slight uptick in market activity, but only in the short to medium term. In the longer term, determinants would be the developments in the broader economy, such as what happens in the labor market. That would be key in the longer term.
And just finally, people that really want to get rid of their property and they're selling back, they're probably going to wait this one out, I would imagine.
They would wait that one out, yes.
Sipamandla, thanks very much indeed for talking to us.